about their cell phone bill, we say, you've got to check out Consumer Cellular.
And now for a limited time, new customers can get their second month free when they use promo code SECONDFREE. Just call, click, or bring us your bill and see how much you can save. Because when it comes to big wireless, if you're staying, you may be overpaying. Call 1-888-FREEDOM, visit a store near you, or consumercellular.com and use code SECONDFREE to get a free second month. Real people paid to share their opinions in this ad. Plans include $5 credit for auto pay and e-billing. Taxes, fees, and other third-party charges will apply. See website for additional details.
Wesley Financial Group is not a law firm.
Are you a victim of the timeshare trap and think there's no way out? I'm Chuck McDowell, founder of Wesley Financial Group, the original timeshare cancellation expert. And I'm here to tell you that there is a way out. All you need to do is give my office a call. I will send you a timeshare exit information kit absolutely free, explaining how the timeshare industry works and your options for cancellation.
Call Wesley now for your free info kit. 800-969-7766. That's 800-969-7766.
Paid for by Wesley Financial Group.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer. Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visit usvi.com and code VIBE2025.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike Tucker with you here on a Thursday, and the story that we are going to kick things off with is the Trump administration yesterday, a little bit after 4 p.m., announcing that they are imposing a 25% tariff on all imported vehicles. This is going to take effect on April 3rd, which is a week from today, so next Thursday. And at this point, the indication is that that is going to be purely just for imported completed vehicles, with the idea that this will be expanding to imported auto parts in May. Mike, yesterday the market, which earlier this week, based on a Wall Street Journal report over the weekend that had said, hey, there are not going to be any sector-specific tariffs imposed, the market said, hey, we rallied, a couple percentage points Monday. We're going to give most of that back on Wednesday because that Wall Street Journal report turned out to be factually inaccurate.
Yeah, look, people keep trading, I think, on the idea.
You can't trade the headlines.
Yeah, they keep trading the headlines, and B, they keep trading this consistent idea that I keep hearing from folks, which is take the president seriously but not literally. Like, can we just start doing both? I think is my response to all of this. Now, do I know that these tariffs won't be waived or suspended 30 days from now? No, I have no idea. But this whipsaw effect in markets is, I'm sure, just frustrating some people out there who are buying on the headline, and I'm sure selling on the headline again today.
Yeah, this is a market where if you are paying attention to the daily headlines, you're going to be exhausted. Like you're not going to be able to function as a human being because, again, earlier this week it was literally Sunday at 4 p.m. that we had the Wall Street Journal piece that was published citing a couple unnamed sources from the Trump administration saying, yeah, there aren't going to be sector-based tariffs imposed, and 3 days later there were. So I don't think it is a viable strategy unless you are some kind of supercomputer yourself, to be able to be like, yeah, I'm going to, trade these markets and headlines. Like, you don't know how long they're going to last. It could be a day, a week, it could be permanent. And so I think that by and large, that's an easy way just to get chewed up and spit out by these markets is, hey, markets are up on Monday, I'm going to buy that. Oh no, they're down on Wednesday, now I need to sell it. Like that's how you lose money is getting just whipsawed like that. So I think that when we look at this, let's talk about the actual, economic impact here. Now that these have actually been, announced, I think it's fair to talk about what the economic impact is. Of course, if they're rescinded on, Monday of next week, then we'll have wasted, 20, 30 minutes of your time today talking about the economic impact of something that hasn't happened. But that's the cost of doing business for us. So here's what we've got. 25% tariffs on imported U.S. vehicles. Right now, as it stands, almost 50% of cars that are sold in the U.S. are imported.
But not across the board by brand, obviously.
Correct. The vast majority of those imports, in terms of where they come from for cars, is Canada and Mexico.
Yes.
And it can be U.S. automakers that have set up shop there. It can be European automakers that have set up shop there. I haven't done the exact, numbers to see like what we have as far as like, Toyota or Hyundai or, other, Asian manufacturers. But look, it's there are not great, there's no great history of Canadian car companies exporting cars to the U.S. It's mostly, they're kind of a third-party place of construction that, is cheaper to produce than in the U.S., but still very close to it, so it makes it easy from an import-export perspective.
Reuters has some data that they put out yesterday or today. Again, this is not perfect from country by country, but rather brand by brand, which car companies represent the highest percentage of their vehicles that are imported into the United States. So Jaguar Land Rover, 100% of the vehicles sold in the U.S., are imported from another country.
Not a great thing if you're trying to buy a new Land Rover. No. Price is going up pretty quickly then.
Volvo, 90%. Mazda, 81%. Volkswagen, 80%. These are all, especially on the Volkswagen side, that's a huge brand in the U.S. and a huge number of cars. Hyundai Kia, 65%. That one is particularly impactful just based on the massive increase in sales that those two companies have seen in the United States. Think through just like how many Hyundais and Kias you saw on the roads 10 years ago compared to today. It's far more significant. Mercedes-Benz. 60...
Well, let me just talk about in 2024 in terms of the auto sales by brand in the United States. Like if you're wondering like who are the biggest manufacturers in the U.S., again, it's these companies that we are naming. Like they're all. Again, there's only so many brands that you actually have out there, but ultimately, like these are all major manufacturers in terms of how many how many vehicles they are selling. Your biggest ones are Toyota and Ford. They represent a huge chunk, but Honda, Kia, Hyundai are your next three. So like you got a huge number of those, kind of wrapped up in there as far as your major U.S. manufacturers.
Rounding out this list, Mercedes-Benz, 63% of vehicles are imported. BMW, about half, 52%. Toyota, 51%. General Motors, 46%. Stellantis, 45%. Subaru, 45%. Honda, 35%. Ford, only 21% of vehicles sold in the United States are imported from another country. And finally, Tesla, at 0%. As we know, they've been making big headlines, and stock, at least in earlier trading, was moving up. Let's see if it is still. Yes, Tesla stock up about 1.9%. But then you go look at, General Motors off 7%, Ford off 3.25% in early trading today, purely on reaction to these tariffs.
So, in terms of the estimates that I've seen, if these tariffs are actually enacted, you're talking anywhere from the average vehicle cost, and again, it's going to depend on the model, the manufacturer. Like, this is not, going to be an across-the-board, here's how much things go up. But when you're talking about the average cost of a new vehicle, you're talking somewhere in the ballpark of $6,000 to $8,000 in additional cost. And this is, again, even if you're talking, hey, Ford makes, I think you said it was like almost 80% of their vehicles in the
Correct.
U.S.?
Yep.
So they're not going to simply say to the 20% of vehicles that aren't made in the U.S., you're going to become more expensive and everything else is going to stay the same. Because again, then those models are like, why would you even make those models? They're just not going to end up getting sold. So instead, you end up being it's going to be something where, okay, maybe those absorb most of the cost, but they also pass some of those additional costs through onto other vehicles. It's not just, again, I don't know which vehicles Ford makes in Mexico at this point. I could probably try to figure it out. So I'm just trying to pull it up right now just so I can give, some kind of example here. Let's see. Okay, here we go. 34 cars built in Mexico for the United States. Great. So, if we're looking at I'm just trying to find a Ford one here. There's got to be one somewhere. GM, Volkswagen, Hyundai, Nissan, Toyota, BMW, GMC. Here we go. Ford Fusion. They still make that, or they get rid of all their sedans?
If it's on the list.
It's 2020, so I don't know.
Okay. Yeah.
Anyways, the Ford Fusion. It cost at the time, I don't know, call it $30,000. They're not just going to go and say, okay, Ford Fusion, now you're going to be $36,000. They might say, okay, Ford Fusion is going to go up to $34,000, and F-150s are going to have a $500 surcharge on it.
Right.
Because otherwise they're not going to be able to sell any of the Ford Fusions, and then why would you produce them at all? So, again, it's going to be varied. It's going to be something that is not uniform. You're going to have to see how the numbers end up working out. And, again, there is always a chance that we're sitting here a week from now saying, hey, this didn't go into effect because of reasons X, Y, and Z, and so this is not actually a thing.
I know we need to take a break, Chuck, but so I think the very clear answer is short-term, expect price increases on vehicles should this stay in place, and each CEO will be talking about this separately. I heard a BMW CEO out there recently saying they're going to basically wait until May and then assess pricing of their vehicles in the U.S., and as I mentioned, BMW imports most of these. But each CEO is going to be having these types of conversations. How long do we wait? What do we do on existing pricing? Let's take a quick break, and then let's start on the employment side of this equation as well, because ultimately that's what the president is attempting to accomplish here, is jobs back in the United States. Where might those jobs go, and what's the UAW saying about all of this? That's next here on the Financial Exchange.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. 2025.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K is Saturday, November 8th, and registration is now open. The race is sold out in each of the past 4 years, and slots will fill up quickly, so don't delay. Visit dav5k.boston and reserve your spot or join Team TFE here at the Financial Exchange. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston.
Mike, what else do you want to touch on as it relates to tariffs and cars?
I thought we'd talk a little bit about the employment side of things and just, you know, we tend to get pigeonholed in our stuff up here in the Northeast. And in the Northeast, what you're likely to experience is no real change to the employment scenario because we don't manufacture any vehicles here in the Northeast, but probably higher prices. And that is the likely trade-off if these tariffs remain in place for a long period of time. UAW Chief Shawn Fain was out this morning talking about, you know, the positive effect this will have on employment in the United States and specifically for the UAW. So I thought it was worth exploring, like where does this manufacturing happen? And it's, you know, obvious states that you're all aware of. The number one state for auto manufacturing employment was Michigan. That was data as of 2022. There was about 167,000 jobs there, followed by Indiana, Ohio, Kentucky, and Alabama. Those are the five states where the most auto manufacturing jobs exist. And I bring those up because if you're talking about changes that these tariffs are likely to make, it's not that it's not that Toyota is going to turn around tomorrow and start construction of a brand new manufacturing facility in Detroit or in Kentucky. They are going to be looking at their existing facilities and saying, how can we move more manufacturing capabilities there? So those top five states also have I was kind of curious, like, what's the unemployment situation in those states? Do they have the capacity to absorb more jobs? And the answer seems to be yes. As of January, Michigan had the third highest unemployment rate in the country at 5.3%. Kentucky was up there as well at 5.3%. Indiana was sitting with an unemployment rate of 4.4%. What other states did I mention? Ohio was sitting there at 4.6%. And so the question that we've talked about on part 2 is, hey, do we actually have the workers to absorb these additional jobs if they come through? How inflationary will that be? How much more expensive is it to manufacture cars in the U.S. compared to elsewhere? The answer is it's more. But I was at least encouraged to see that, hey, there seems to be some slack in the labor force in those states that are most likely to be affected by increase in jobs if they end up coming back and if these tariffs remain in place for a long period of time.
I'm not sure it's that encouraging.
I am not trying to find
4.5% unemployment is really low.
It is. Yeah.
It's 4.5% unemployment. Normally, you've got employers saying, I can't find anyone qualified to hire. And that's not for something like auto manufacturing.
Michigan at 5.3, though, that's fairly high.
Not really. I mean, Mike, aside from the last few years, the only periods, like you go look at the historical trends on the unemployment rate, and you look at like where we normally bottom when it comes to the unemployment rate. And again, like I'm just looking back at like the trend historically that we've seen. And in previous good economies, typically you get down to around, again, you've got 2 instances where we've gotten down to around 4% in the last 70 years.
Yep.
Other than that, you normally bottom around 5%. 07 you got to 4.6%. That's the lowest that you got. And I don't think there was anyone in 2007, before the financial bubble burst, who was saying, man, unemployment's still, high at 4.6. Thank goodness we can hire workers.
Yeah, what a terrible job market. Now, I guess I'm looking for silver linings here, and the answer is, hey, these are going to be increased demand for labor in a labor market, as we've touched on, across the United States that remains very tight. There has been signs of slack here and there, and yes, states like Michigan and Kentucky have a slightly higher unemployment rate than others, but all in, it remains a very tight labor market at a time where more Americans are going to be demanded for that labor.
Also, when we're talking cars and tariffs, there's a little bit of news from Ferrari, if anyone's interested.
Oh, yes.
For those who are, considering making a purchase of a new Ferrari. This is at 6:45 a.m. They put this out. Ferrari announces that it will update its commercial policy based on the preliminary information currently available regarding the introduction of import tariffs into the USA. While reaffirming its commitment to maximum client attention and protection with the goal to provide certainty to them, the commercial terms will remain unchanged for orders of all models imported before April 2nd, 2025. So if you've imported your Ferrari before next Tuesday, you're still paying the same price. And for orders of the following 3 families, the Ferrari 296, SF90, and Roma, regardless of the import date. For the current remaining models, new import conditions will be partially reflected on pricing, up to a maximum 10% increase in coordination with our dealer network. On such basis, Ferrari confirms its financial targets for 2025, with a potential risk of 50 basis point reduction on profitability margins.
Well, forget that. I'll just buy a Civic instead. Never mind.
I mean, you could buy a few Civics, Mike. Here's the thing. You could get a few of them. But, and again, look, this is Ferrari, who occupies a unique space. The buyer of the Ferrari is not buying it to commute in 128 traffic.
No,
that's not and quite honestly, the buyer of a Ferrari probably doesn't care about price. They probably have a lot of flexibility in terms of what they can pay. If it's a classic case of, hey, if you have to ask, you can't afford it.
Yeah.
But what I will say on this is, again, what Ferrari is saying is, we are going to raise prices in order to try to hit our financial guidance, not we are going to absorb the tariff ourselves. Now, different companies with different customers are going to find that they can do some variations of this. If you are trying to sell, new vehicles in the, the lowest price point range, trying to hit, $20,000 per vehicle, you might say, okay, we're going to take a little bit more of a hit there, but that's not where we make our margins anyways. We make them selling the $70,000, $80,000 SUVs. And so maybe let's take Honda just as an example. If you're looking at Honda, they might say, okay, the Honda Civic, sure, right now the base version of it is priced at, $24,250. Okay, we're not going to raise that by, 10 to 15%. Maybe we'll raise that by 5 to, $25,250 or something like that. But when you take a look at what we're doing on, the Honda Prologue or something like that, or, the CRV, that are, the average price point on those is closer to $40,000 and $50,000 than $20,000. Okay, you're going to see 10% bumps on those because that's where we need to figure out how to make the money. Quick break here. When we return, we've got Wall Street Watch after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike, what's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment investment risk, long-term planning. Those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after yesterday's sell-off, markets today are trading in choppy fashion and are currently edging higher, actually. One day after President Trump announced plans to impose a 25% tariff on imported autos slated to begin on April 3rd. At the moment, the Dow is edging 24 points higher. S&P 500 is up by 0.1% or 6 points, and the NASDAQ also up 0.1% or 19 points. Russell 2000 dipping by 1 point. 10-year Treasury yield is up by 3 basis points at 4.37%, and crude oil edging higher, trading just below $70 a barrel. Several auto stocks are seeing losses on the tariff announcement. General Motors down by 8%, Stellantis down by 2% overseas. Porsche, Mercedes-Benz, Toyota, and Honda also traded lower on the news. Ford down by 4%, Tesla up by over 3%. Meanwhile, after its near 12% jump yesterday, shares in video game retailer GameStop stopped down 12% today. The popular meme stock has seen increased volatility after the company's board approved a plan to buy Bitcoin with its corporate cash, echoing a move made famous by MicroStrategy. Elsewhere, investment bank Jefferies missed expectations for its quarterly results due to declining returns in asset management. That stock down by 8%. According to Reuters, H3C, one of the largest server makers in China, warned of possible shortages of NVIDIA's H20 chip. In a note to clients, NVIDIA pulling back by about 1%, Alibaba up by 3%. After the Chinese tech giant launched a new open-source AI model that can be used on edge devices such as mobile phones. AMD down by 3% after Jefferies downgraded the chipmaker to hold from buy, citing increased competition as one reason for concern. And after today's closing bell, we'll see earnings from Lululemon. I'm Tucker Sylvan. That's Wall Street Watch.
Mike, I want to talk a little bit about a company by the name of CoreWeave. Now, this is probably not a household name to many people listening. They are effectively a cloud AI provider. Basically, what they do is they buy up a bunch of chips from NVIDIA, and then they license out the capacity to third parties who want to be able to use them. And they had quite a nice 2024. Their sales, their revenue was up more than 700% to almost $2 billion. So
that is quite nice.
Revenue grew quickly. 77% of that revenue came from two customers, with Microsoft being the biggest one, accounting for 62% of revenue. So, few things on this. Number one is, look, when one company, when one buyer makes up 2/3 of your revenue, if that buyer decides to make changes in how they are operating, you're obviously at a significant risk. The second is they're trying to IPO tomorrow, and it's going really, really badly. really, really badly. So here's the deal. They were trying to raise $2.7 billion in an IPO. They were trying to price it between $47 and $55 per share, selling 49 million shares. This morning, they announced that they were cutting the size of the offering by almost 20%, from 49 million shares down to 40, and also cutting the expected price range down to $40 per share as well. In effect, they're trying to raise about $1.5 billion now. And it went so badly even after that NVIDIA, who, remember, NVIDIA is the person, the company that they buy their chips from, NVIDIA decided to go full snake eating its tail on this and say, hey, we're going to back this IPO with a $250 million investment. So investing $250 million in the company buying your products. Now, I don't know a lot about a lot of things, but I do know a lot about the tech bubble. And I got to tell you, this is the crap that was happening then.
Yeah, except the IPOs were going off well.
This is the crap that was but like when it was starting to pop, this is the stuff that was happening.
Yeah.
And I can't tell you how many heebie-jeebies I have today just being like, oh, this is not good. So you've got this, AI has been one of this hype train that's just been rolling through for the last 2 years, taking everything in its wake. And now you've gotten to the point where, one of the bigger, third-party AI providers out there is trying to IPO, and it has to cut its IPO size by 45% and then give a sixth of that IPO to the company that it's buying most of the stuff from in order to support the IPO. I got to tell you, that doesn't feel good to me. And this also comes on the back of yesterday, 2 confirmed reports that Microsoft is walking away from potential data center build-outs because they don't have enough customers to fill them.
You've got Apple walking back some of their AI plans. Yeah, look,
it feels really dodgy.
You never know until it's in the rearview mirror. But, yeah, when you have... I mean, what other IPOs in the AI space have we had over the last couple of years? Snowflake, Palantir. Like, there are not many AI IPOs that have actually gone through, and to see one of the few that has a very legitimate business model that has grown substantially over the course of the last few years fizzle and die. No, it's not fizzling and dying. It's fizzling and needing to rely on significant partners to lift it back up. I agree with you. That is definitely signs of weakness.
It gives me... I often say that you can tell kind of where you are in a cycle of a certain industry by kind of what's happening in the IPO market there, and oftentimes a lot of the big hyped IPOs tend to represent like a short-term peak in those markets. And you go back, the ones that I come back to recently, Coinbase and Robinhood, both represented, kind of the peak of short-term hype around both crypto and like retail trading. There was so much hype around those in 2022, I think it was, when they IPO'd, and that ended up kind of being okay. Like, this is as good as the gooding, as good as the getting is going to get. Robinhood, just to follow up on this and let kind of where it stands right now. Robinhood got up to, I don't know exactly where, but it looks like $70-$80 a share. It's at 44 right now. Coinbase went up to let's see. Looks like it was like $350 and change. It's at $193 right now.
The problem is, Chuck, that if this is a representation of overall revaluations and reassessments of what AI companies are worth, then it represents a much more significant portion of the market than crypto did.
Exactly. There weren't a ton of the stock market in 2021 was not powered by, hey, look at all of these crypto exchanges, surging forward.
No, they were surging forward. It just wasn't driving the S&P 500 higher.
Well, there weren't any other crypto exchanges that were publicly traded. Right. Like, it was a non-factor. And so this, if there's an actual issue here, yeah, it's a key difference in that there's some real representation in the market for these types of companies. We'll see if this ends up mattering, but look, a lot of the AI darlings have not exactly been in a great spot over the last year or so. I mean, if you look at the 1-year charts on a lot of these companies, I'm just pulling up NVIDIA just because it's the biggest name out there. NVIDIA right now, if it's still in this spot at the end of May, it'll have been flat over the prior 12 months.
Yeah.
Which means it's been flat for the past 10 right now. Now, not exactly flat because it's gone, down 20% from here, up 20% from here, but ultimately you've gotten nowhere. And so you've got some things here that are pointing towards some concern about where AI is going to go from a growth perspective, and that's not something it's had to answer for in the last 27 months. Since December of 2023, or 22 rather, it's been all systems go there. And this IPO is showing some signs that are really quite concerning to me for the overall health of that as a growth engine in the U.S. economy. We'll see where it goes, but again, not getting the warm and fuzzies from this one right now. Anything else that you want to add?
No.
Let's see. Let's take a quick break. Mike, when we come back, can we talk about something so obscure but also just so repulsive that we have to talk about that, and that is basis trades?
Yeah, we can go to the basis trade, Chuck.
Okay, I'm sorry. This is just the hour of repulsion that we are doing here on the Financial Exchange, and we're talking basis trades next, so stick around.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visit usvi.com and code VIBE2025.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
All right, so there's a really obscure headline in Bloomberg today. It's titled, Fed Urged to Explore Hedge Fund Bailout Tool for Basis Trade. So a few things on this. The first is a hedge fund should never, ever, 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 ever be bailed out. No, I'm like, we have to really make a point of this. If you are taking so much risk in running your book that you blow yourself up in the process, sorry, that's on you. That's
Correct.
not on me.
100%.
That's not on me. If the Fed or anyone else thinks there is so much concentration in these trades that it could risk the broader financial markets, then they need to go to Congress and say, you need to legislate XYZ out of existence so that it can no longer blow the entire financial system up.
So do you buy the premise, right? The premise here is, look, this obscure trade that involves treasury bonds, the futures that are on those treasuries, and this leveraged trade that has become quite popular with hedge funds that takes advantage of this tiny profit that you can make, but they basically borrow a whole bunch of money to expand that profit.
It's office space, but with leverage. It's fractions of a penny.
Yes.
Over and over and over that no one notices. But then when you combine it with like 100x leverage, you get to some pretty nasty places.
And so if it moves in the wrong direction, the problem is that these hedge funds would suddenly have to dump a whole bunch of treasuries onto the market, creating all sorts of liquidity issues. Do you buy the premise that, I do, that because it happened in 2020 basically, that it can completely blow up the system and could lead to things like money market funds blowing out and other financial systems breaking down?
Yes, I buy the premise.
Then these companies are too big to fail, and they need to be regulated as such.
Yes,
you are participating in activity that makes you systemically important, like Bank of America, J.P. Morgan Chase, Wells Fargo, those banks that we designated that aren't allowed to do this sort of thing anymore. And so nobody, as much as it sucked to bail out those guys, at least those ones served retail customers. If the government has to go and bail out a hedge fund that only serves massive high net worth investors, then we have really lost sight of what the purpose of all this is.
Right. This is the kind of thing that everyone hates. Like,
right.
It's just it's stupid, and people be like, oh well, no, like you can't regulate them. No, like we have plenty of regulation that is way dumber than saying, hey, you can't blow up the financial system. Okay. You know, like we regulate overdraft fees. I think we can like regulate, hey, don't hold so much leveraged treasury stuff that you can blow up the financial system. Like that seems to be a reasonable place to be.
Yeah.
And if it's not, then what are we even doing here?
It goes back to a theme that we've kind of seen play out over the last few decades where the financial system just continually tries to remove the downside risk to markets here through these backstops that they have to put in place. And the problem is those backstops largely benefit oftentimes companies like hedge funds who serve a very narrow customer base.
Right. If you blow yourself up from borrowing too much money, the federal government does not come to help you.
And the federal government needs to do a better job of ensuring that when you blow yourself up, you only blow yourself up.
Yes. Like if you want the premise to be, hey, if you borrow too much money and can't pay it back, that's on you, fine, let's apply that to everyone. Don't be like, well, you're a hedge fund who is so big that you would ruin the financial system, so you're going to have your losses socialized across, everyone. But if you're Jimmy who just bought a house and lost his job, sorry, you're out of luck. I'm sorry, that's why everyone hates what happened in 2008. So let's not do that again. And gosh, I can't believe that we're even having this discussion here.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Mike, do you want to talk copper, Robinhood, or electricity?
Let's go Robinhood.
Okay. Piece in the Wall Street Journal. Robinhood customers are growing up, and the brokerage wants to keep them. It's talking about how their median age of their customers has climbed from 31 to 35 years, which you would expect over the past 5 years. Like, okay, if you keep most of your customers and it's been 5 years, they should be almost 5 years older. Like,
well,
got it.
Yes, but, I mean, does it not surprise you that seemingly means that new 18-year-olds are not signing up for the platform at the same rate that their older millennial and Gen Z counterparts did?
Not really.
No.
They build themselves as the cool brokerage, and when you do that, okay, someone else comes along who's cooler, and takes away those. That's why cool is not a good defining characteristic as a broker. Things that you want are, hey, we execute well, and we have a wide range of services. And the good news is, like, Robinhood's like, okay, like, we're starting to have to lean into being someone who can provide other services and do stuff beyond what we originally did.
Why? Because 35-year-olds on average are wealthier than 31-year-olds.
And they have different things that they want or need as a result. And so it's something where, they're trying to figure out, hey, how can we, attract it? How can we keep those 35-year-olds and prevent them from going to the places that otherwise offer, these other things? So, again, things like, different managed accounts that they're putting out there. They are trying to build a hybrid program where they have financial advisors, but most of the stuff is done automatically through an algorithm. So, those types of things. So they have some interesting things that they're working on. I don't know, how big of a difference it's going to make, for the company overall. I don't know what kind of uptake they're going to get on these things. But I do think it's the sign of a more mature company that they're talking about doing this instead of just like more confetti when you make a trade.
Yeah, or sports betting within your brokerage account. I'll be interested to see what they're able to do on the banking side of things. I don't know that I would have full confidence in putting my bank accounts with a company like Robinhood, but we'll see what they're able to do there because that's something they want to roll out later this year or next.
We're going to take a quick break here, but we still got hour 2 coming up in just a little bit. We're talking some housing, a little bit more AI, and a whole bunch more coming in hour 2 on the Financial Exchange.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and we've got a pretty quiet day overall. Modest rally taking place on the S&P and NASDAQ, but nothing huge. The Dow's up 23 points, so about 0.05%. You've got the S&P 500 up 18 points, about 1/3%, and the NASDAQ up 76 points, about 0.4%. So, again, kind of a modest rally that's taking place here, but, somewhat of a mixed day. You don't have, everything pointing in one direction. It's just kind of, treading water, a little bit of a relief rally after yesterday's sell-off, and just trying to figure out where this market goes next. We often on this show talk about markets that, can be a little bit range-bound, and we had that as the case really from like mid-October of last year through the end of February this year. There was about a 6% range that the S&P 500 was in. It seems like we're kind of settling into a new range over the last 5 or 6 days where, hey, you might have had, a 1% up day and then a 1% down. It's, you've kind of been treading water for the last week or so, trying to figure out where is the next move. Is the economic data going to continue to, print strongly and suggesting, no major problems afoot despite concerns about the economy and where it might be going? Or does the economic data take a turn for the worse and we start to see things slowing down and sliding from here? So I think that's the question that markets are trying to digest right now, and that's why you've got the S&P 500, again, it's at about 5730 right now. That's why you've got it sitting here at the moment about 6.5-7% away from its all-time high that it reached back in February, saying, okay, if you want me to get back up to those all-time highs, you got to prove to me that there's no problem in the economy. But likewise, hey, if you want me to sell off further, I got to see some proof that things are worsening and not just fear of worsening creeping in. So that's what we've got in equity markets.
And as to that sell-off yesterday, Chuck, because a fair bit of it did come in the afternoon after the program aired for our show yesterday. The markets, the S&P did close down more than 1% and NASDAQ off more than 2%. Dow only off about 0.6% in trading as traders awaited that news that we now have on tariffs on autos and auto parts.
10-year Treasury continuing its recent sell-off, up another 4 basis points to 4.379%. Oil, West Texas Intermediate, moving up as well to $69.89 a barrel. That is up 24 cents overnight. AAA National Average for gas prices also rising to $3.15 and 0.5 cents. That's up about 0.5 cent over the last day. We're now up about 8-9 cents from where we had bottomed out in February and up about 3 cents over the last month overall. Still running about 35 cents below where we were at this time last year. Finally, we go over to gold, which is having just a nice little another all-time high day here. It's up $45.50 an ounce to $3,068. So again, a new all-time high for gold as it is trying to sniff out where growth and inflation are going. And right now, the sniffing saying, hey, I'm a little bit nervous about the potential for inflation here. That's the message that I'm hearing from gold, at least when it talks to me in my ear with its obviously real voice.
And Chuck is deranged. He's lost it.
So there's that. Let's talk a little bit about the real estate market. And there's a good piece from the Wall Street Journal that sums up exactly what we are seeing right now, which is the places that were really hot the last couple of years have cooled off significantly for different reasons. The places that, were a little bit cooler are hottening up again. And so it's the headline on this piece is this 4-bedroom ranch in New Jersey tells you everything about the lopsided housing market. And what it talks about is, hey, they listed this place for $1.1 million. It's a 4-bedroom ranch. It looks like a perfectly nice, little, wonderful little place to raise a family, like picket fence and all. It looks great. $1.1 million is obviously not a cheap price, but what they ended up with was 25 offers, and it went $200,000 above the asking price, which is
a lot.
I'm like, gosh, is this 2021 again? What's going on here? And on the other hand, there was in Miami a 6-bedroom home with a pool, grand staircase. It's been on the market for 2 months now without an offer. It was originally listed at $999. They cut the price by $9,000. Still no movement on that front. And it represents the fact that the housing market in the U.S. is once again not really moving in unified fashion, but this time a lot of the places that were hot a couple of years ago are just not seeing the activity they previously were. And so in order to clear that inventory that's building up, you're seeing more and more sellers resorting to price cuts, often much more significant than what we are talking in this property that still hasn't sold here.
Yeah, when we look at these data, we oftentimes cite, how many active listings there are in different parts of the country. We've talked about how Connecticut is persistently just a fraction of what they had in terms of homes for sale prior to COVID. But the Wall Street Journal did it a few different ways, and I think those are equally interesting to me. So they went out and surveyed over 1,000 real estate agents by region, and they asked them, hey, what you're seeing out there in your market that you service, do buyers outnumber the sellers? Are they equally matched, or are sellers outnumbering buyers? And here in the Northeast, we had the single highest response of realtors saying, no, the buyers are far outnumbering the sellers. About 80% of realtors surveyed in the Northeast found that was the case. In northern Florida, actually southern Florida, was the most in the opposite direction, where you had, looks like about 78% of realtors surveyed in southern Florida saying, no, sellers are outnumbering buyers here in southern Florida. Nationally, it is still looking like a market that is more heavily weighted towards buyers outnumbering sellers, but it's pretty extreme in the Northeast, in the Midwest, where there is a lack of inventory, and pretty extreme to the other side in places like Florida, Texas, but really southern Florida kind of takes the cake on that one.
And so what you're seeing here, I always like to pull Mike Simonson's data. He works for Housing Wire, and I think he just does, again, really interesting work on what we're seeing. So what you've got right now for single-family inventory, according to their data, nationally you got about 668,000 units out there. That is up 30% from a year ago, and now only about 19% below 2019 levels. So you've got single-family inventory continuing to rise. Price reductions, though, are currently happening on 34.3% of single-family listings, which is the highest percentage of price cuts that he has seen in the past decade. Normal for this time of year is around 25% of listings with price cuts. So this is almost a full 10 percentage points higher that you're seeing. So basically, the message is very simple. If there's going to be more inventory on the market, in order to clear that market, you have to have the price come down because there are not enough people in these markets to be able to buy these houses at these prices. It's pretty straightforward, pretty simple. Let's take a quick break here. When we come back, we're going to be joined by Michael Santoli from CNBC talking about what we're seeing in this market right after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bend you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And today's Quentin Tarantino's 62nd birthday. Tarantino has written and directed 10 movies in his career and plans on making only one more film. Trivia question today. How many Academy Awards has Quentin Tarantino won? Once again, how many Academy Awards has Quentin Tarantino won? Be the 5th person today to text us at 617-362-1385 with the correct answer, and you get a brand new Financial Exchange Show t-shirt. Once again, the 5th correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, I got 2 pieces here today. I got Apple's AI isn't a letdown, AI is the letdown. And then I got Bill Gates, within 10 years, AI will replace many doctors and teachers. Humans won't be needed for most things.
Try to put those 2 together.
Now, both of these, well, it's clearly a Windows versus Apple situation.
Yeah, right.
You know, like that's obviously what we're seeing here. But in all seriousness, here I think both of these things can kind of be true, but there's a lot of proving it that needs to be done on the AI side, just because, again, I continue to see just like very basic errors with AI platforms that either I or other people are using. I had a buddy of mine who I was supposed to be meeting up with in the last week or so, and his Apple AI told him the wrong time to meet me based on the text message that we had it set the wrong reminder for him. And so if AI right now can't get things like, basic the time when you're supposed to do something right, I don't think it's going to necessarily replace all people within 10 years. I also admit that we are still just at the very beginning of this cycle, and things could look dramatically different 5, 7, 10 years from now, and I'm open to that as a possibility, but there's a pretty high bar that it's got to get over, simply because right now it's making mistakes that humans make, and again, there's plenty of humans that put the wrong time on their calendar too. I'm not trying to say we're perfect, but if I'm going to have someone or something making a mistake, I'd rather it be a person than a computer, because generally with non-generative AI, with just regular computers, usually they don't make mistakes, it's user error.
I think part of my conclusion here is that today on artificial intelligence, you need some degree of expertise to be able to actually operated effectively and efficiently. And therefore, it was a big mistake for Apple to roll it out because that's not what they're looking for. They're looking for an easy-to-use product that most of their customers can go with. So, I think that was part of the mistake that Apple made.
As promised, we're now joined by Michael Santoli from CNBC, here to talk a little bit about what's been going on in markets. Michael, how are you today?
I'm great. Thanks a lot for having me.
Absolutely. We went through earlier this month a pretty rapid 10% correction in stocks that, quite honestly, I was sitting there towards the end of it. I'm going, how did this market hold together and not fall further? Because it felt like it could have been a lot worse. What was kind of the thing that held this together and prevented it from getting worse at the time?
Yeah, I mean, first of all, I think that's a characteristic of corrections is that they feel as if they absolutely could blow through that floor and become worse. I guess what held it together, at least initially, and I think this is usually what happens, is you just get this huge kind of crescendo of one-way, get-me-out, liquidation-type selling after people try to rationalize and they try to say, oh, maybe I'll buy the dip. And I think you saw, I wouldn't say it's the most indiscriminate, bout of selling I've ever seen, but
Sure.
We did get oversold enough. And I think that the other piece of it, if we get away from the kind of market mechanics of it, is that it was largely about this confidence crash, right? I mean, obviously, crazy, noisy news of tariffs and Mag 7 kind of collapsing and what is the AI trend really? But it did not yet feed into obvious economic weakness that you could look at in the data. And the credit markets never really showed a ton of concern about the macro stress. So I think if you put that all together, it was enough to people to say, hey, we give it a shot. If we're in the business of buying pullbacks, very brief 10% corrections actually have a decent record of having at least a comeback attempt before long.
So let's look at kind of the optimistic side of the equation. If someone out there is saying, hey, I think that this is, the worst is over and it's only up from here, what are the things they can be looking at and pointing to be able to justify, yeah, there's a chance to rally further from here and get back towards new all-time highs?
I think most of what you would point to is, in addition to the fact that the corporate credit market has been really solid, and usually that starts to act up if we have recession on the horizon, I think you could basically say is the consumer is in a really bad mood, but they are not yet across the board very strapped. In fact, there was probably a weather influence weakness in January and February spending trends. That means there's dry powder for them to pick up the pace. And broad earnings expectations have remained pretty solid. Now, maybe that's all hope for, back half of the year kind of acceleration in the economy. But even for the current, first quarter, S&P earnings supposed to be up 7-ish%. Usually companies beat. So that's not a terrible backdrop to say that, we can sort of afford to buy stocks and assume the market's going to be well supported. There is a contingent still, even though many people have come off the idea that the policy mix we're getting was going to be very growth-friendly and was going to be very investor-friendly. You can still say we need to get through this noisy kind of tariff period. We're front-loading a lot of the pain to maybe get to a point where the attention turns to tax cuts, and who knows if deregulation can have near-term tangible effects. So that's probably the bull case. Aside from, look, the trend is up. And nothing we saw in the early part of this year. If you didn't have any access to news, you might look at the chart for the first part of this year and say, yeah, it's probably what you'd expect after two up 20% years in the S&P, post-election year. Usually you get some weakness in the beginning part, not a big deal right now. Now, valuation hasn't reset. It's not like this is a cheap market or risk-free market by any stretch. But to me, that's the bull case.
Does it feel to you like the next couple months of economic data are pretty critical in sorting out, hey, we've had these soft data prints that you reference. Is it going to turn into weak, hard data, or does the underlying strength of the economy allow us to power through?
Yeah, I think that's something close to the whole ball game at this point in a way. It really, if the economy, yeah, sure, we have definitely a soft patch. The tracking numbers are saying, who knows, it could be a negative print in the first quarter, but if nothing else, first half of this year, maybe we're sub 2%. Now, muddle through is okay for stocks if it seems like we're not really seeing the bottom fall out. So, yep, employment matters a lot. Today we got weekly unemployment claims. Everyone keeps waiting for a potential surge there because we're hearing about government and government-related layoffs. Federal workforce definitely seen some cuts. It's not really spilled over. At the same time, it's also a really weak hiring environment. It's a very low metabolism labor market right now. It's a fragile equilibrium, but so far it's hanging together.
Last thing that I want to ask you about, the growth engine for markets for basically all 23 in the first half of 24 was AI. That was the thing that was driving it forward. That leadership has faltered a little bit. You've got this CoreWeave IPO that seems to be going rather not well that's scheduled for tomorrow. Where's market leadership come from if AI and that trade continues to languish?
It's a tough trek because so much of the market cap of the S&P 500 and the broad U.S. market is essentially a quasi-AI trend. I think you could make the case that you're going to start looking for the first wave of AI beneficiaries as opposed to the AI infrastructure direct build-out plays. I don't know what that would mean entirely. I mean, I think Meta has been falling into that category to some degree. But it's interesting because if you look at the big seven, they've all either got questions about the core demand for their product like Google in an AI world, or they're just NVIDIA or Broadcom, where it's essentially these guys are spending tens of billions a year. It's falling to the bottom line of these companies, and we put a multiple on those profits. That game seems to have been compromised. I don't think it's game over, but what I suggest and have for a little while is the market's never going to put those companies on as long a leash as it had it in 23 and 24. It's just because everyone kind of knows we're probably going to hit at some point a moment of overinvestment where it's gone too far and it's uneconomic. Nobody's saying it's right now, but as long as we have that sense that we're kind of looking for that moment to hit, I think that it's going to restrain how much you're going to pay for it. So it's tricky. I mean, financials have been great, but I don't think that there's a huge high ceiling on how much they can power this market. So I think that's why it's funny. Everyone all last year was like, boy, we hope this market broadens out. I hope it becomes more than just 7 stocks. Well, the 7 stocks are worth 33% of the market cap. If you got...
Michael, we got to run. I apologize. Yeah. We're out of time, but appreciate you joining us, and we'll talk to you again soon. Michael Santoli from CNBC.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Well, in honor of Quentin Tarantino's 62nd birthday today, we asked the trivia question: how many Academy Awards has Quentin Tarantino won? That would be 2. He won both for original screenplay in 95. He won for Pulp Fiction, and again in 2013 for Django Unchained. Winner today of the Financial Exchange Show t-shirt was Lewis from Warwick, Rhode Island. Congrats to Lewis. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, there is a piece in Barron's today, and it's titled, Get a Monthly Check in Retirement Without a Pension, which sounds great, but then it also says there are drawbacks. What are they talking about in this piece?
Just last year, or perhaps the year before, ERISA and a few other regulators got together and allowed for annuities to take their place within 401ks. And annuity is a word that scares the, I think, living bejesus out of a bunch of listeners. So, I'm going to take it step by step here. But the promise is, hey, you can now select this other bucket for your 401k money to go into with the goal of replicating a pension when you retire. And that, I'm sure sounds like a pretty good sales piece to it. The problem, as it alludes to, is you are combining what I consider to be two of the most commonly confused financial products out there. One would be the employer-sponsored retirement plan, just a lot of complexity in terms of how it works while you're there, once you leave, what happens if there's company stock in it, traditional versus Roth, and then you're combining that with the features of an annuity where the variation on those types of products are far-reaching as well. I think the point that I have on this is it could actually be pretty compelling, right? If you spend 20 years at your employer and you're able to contribute in some way to something like this that guarantees an income stream, and also the 401k provider is able to negotiate the fees down from the annuity company that you would normally face for buying one of these products, because oftentimes they're substantial, that could actually be a pretty good deal for the consumer. The problem is the complexities of it, the job hopping that we all do, and actually identifying how it all works it's really complicated, I think, is my answer to this.
You mentioned job hopping. So on this, just as like a question that I don't know, let's say that I work in one place for 25 years.
Yeah.
And now I'm 50 years old and I go to work for a place that has one of these offered. Can I just can I just roll everything over and put it in and just be able to, contribute that to like the eventual building of whatever the payout is, or do I have to have started it initially? Like, how does it work on that front? Or, okay, let's say that I leave the company but don't retire at, an age where I could annuitize it. Like, it's unclear how all of this works, and I think there's a lot of details that are probably product specific and very complex, unfortunately, that you have to make sure you're paying attention to, that we don't know the answer to, because we're just talking about this in general, not on the specific plans.
And I think that's going to be the downfall of this is with 401ks, 403bs, there's a set of rules that applies to all of these. And so if you're at one employer and then jump to another, yeah, the plan might be at Fidelity at one place, TIAA, CREF, and Vanguard at another, but the same general rules apply, right? Like, this is how you would take it out of your paycheck. This is how much goes in. This is how it's going to be treated from a tax perspective. These are the contribution limits. None of those standards exist when we're talking about these pension-like products in the annuities, and therefore I think it's going to be problematic, because you could be at one employer where the pension income stream is guaranteed based on how many years you put in a certain percent, and then another one where it's entirely based on market performance, and you're left saying, I just don't get it. In either case, these are brand new offerings on the market, and as I just pointed out, I would not necessarily poo-poo them. I think they could actually really benefit some consumers who are out there and saying, look, I'm just not comfortable investing in markets in the long term, and I'm looking for more security and safety. This could be a relatively attractive offer, because, again, you're getting the mass negotiation power of your employer who's going in there and negotiating the fees with the insurance companies rather than you on a one-off basis. But there's obviously a lot of downfalls too. If you are evaluating your 401k or your 457, maybe you work for the state or a non-for-profit company, and you're trying to figure out, hey, how does this work maybe with my pension, with my Social Security? Where should that next dollar go? Should it be in traditional versus Roth? These are complicated questions. These go beyond, hey, what's the best ETF for me to buy this month? These go beyond, do I need to have an aggressive or conservative risk tolerance? These are long-term tax planning issues that can have a very big effect on your retirement. If you're facing them and not sure where to turn, please give the folks at Armstrong Advisor Group a call. We offer free consultations. We'll walk through with our clients the steps within their 401k plan, their 457, and how to maximize those benefits for their long-term future. You can call us by calling 800-393-4001. The number again for the Armstrong Advisory Group, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, I want to move to something that's a little bit, not more upbeat, but a little bit less,
please,
important. I want to talk about just why the 2025 box office is just a big pool of suck right now.
You didn't like Snow White?
I didn't even know there was a Snow White movie coming out. Okay, but here's the thing. So I was driving home yesterday, and I was like, okay, like what am I gonna do when I get home? Like the kids and my wife were out because of I forget what was going on, but I was like, what am I gonna do, tonight? And I was like, I don't know, maybe I'll see a movie. Like that sounds fun. Here are the movies that are playing at the closest theater to me, which by the way has a whole bunch of screens, so it's not just like 3 movies and it's because it's small. The Woman in the Yard. Audrey's Children, A Day of Reckoning, Death of a Unicorn, Mad Square, The Penguin Lessons, Robinhood. Didn't even know they were making a new Robinhood.
What?
The Chosen, Last Supper Part 1, A Working Man, Vera Dira Suran Part 2, L2 Emperon, Princess Mononoke 4K, which, by the way, the original Princess Mononoke is a fantastic little anime movie if no one's ever seen it. 1997, another great year for movies, by the way, not 2025. The Alto Knights, Ash, The Assessment, Disney's Snow White, Locked, Magazine Dreams, Black Bag, The Last Supper, Novocaine, Opus, The Day the Earth Blew Up, a Looney Tunes movie, Always Have, Always Will, Ephus, Mickey 17, Rule Breakers, Last Breath, The Monkey, Captain America Brave New World, Paddington in Peru, I Heart Eyes, Dogman, One of Them Days. Now, there's like 30 movies there because most of these are only playing at one showtime because they're so bad they can't attract enough people to play in multiple showtimes. What is going on here?
I've heard of one of those, and that was Novocaine, because I heard that's actually pretty good.
I also thought you were lying, so I went to the local movie theater near me to confirm. And no, these are real movies that are in theaters right now. Chuck did not make them all up.
So instead, I went home and I just watched Executive Decision for the 47th time, and that was fine. It's all good. But here's the thing about movies right now. They're so expensive to make that the only ones that really get made are either, the high-end Marvel ones where you're spending $200 million to make the movie, or, the little indie flicks that win all the awards, but you sit through and you're kind of like, hey, I like movies, but I'm not sure I liked that. And that's fine, but the problem is the mid-market movie is dead because of how movies make money now, which is there's no secondary market after their run. You don't get anything from streaming, and so all the DVD sales that you used to get have basically dried up. And so it's something where the mid-market movie can't get made profitably, and anything that is high-end where a director or a producer wants to really play around with ideas becomes a 10-episode streaming series instead. And so you just end up with a bunch of random stuff out there that no one's ever heard of, that no one knows of, and that's why the box office sucks.
Good summary. I can't believe Harrison Ford's in Captain America Brave New World.
Yeah, he's Red Hulk or something like that. I haven't seen it myself, but I had a buddy of mine who was talking about, he's Red Hulk, which, okay, it's fine. Sounds great. Anyways, yeah, so that's what's going on with movies right now. I haven't looked at what's coming out later this year, but it sure feels like we piled a lot of good stuff into the last couple of years, and now not really sure. We'll see, but not off to a promising start, and it's showing up in the revenue, so good luck, guys. Let's take a quick break. When we come back, we'll do a little bit of stack roulette.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
Mike, what do you got for Stack Roulette?
I know the news has been coming pretty fast, and for me it seems like a year has passed in the last 6 weeks. But, Chuck, do you remember a little something called the TikTok ban passed by Congress?
Yes, I do.
Well, President Trump delayed it by 75 days via executive action, basically saying, look, we've got a negotiation on the table to be able to potentially sell it. Well, those 75 days are up very soon. April 5th, we hit the deadline here on the TikTok ban, and I haven't heard really anything in terms of some sort of looming transaction for TikTok. Maybe it's a good thing that I haven't heard anything, but in any case, the use of the app and the download of the app has kept on going. Google and Apple both allowed new downloads after the Trump executive order or a few weeks after that. And we are suddenly coming into this April 5th deadline. It got brought up and made headlines again because President Trump spoke to potential Chinese tariff cuts in exchange for a TikTok deal, which I guess, okay. But in any case, haven't heard anything on it, and we will probably hear quite a bit out of it over the next week because that ban is Saturday of next week.
Can't wait.
Yeah, looking really forward to it. Again, this was passed for national security reasons. Anything short of full divestiture of that, I know that there are lots of tweens and now 20, 30, 40-year-olds who are going to be very upset by a TikTok ban, but anything short of full divestiture of the data from mainland China, in my opinion, falls well short of what Congress asked for.
I would agree. Let's talk about what falls well short of what human beings are asking for, and StubHub. StubHub apparently has a setting on it that filters out the majority of tickets that are available on the site, and it's set as the default option so that you think there are fewer tickets available than there actually are.
Good.
And I gotta tell you, why do all ticket exchange places suck?
They're selling fast. Don't you see that?
Why do they suck?
Better get them.
Only 8 left under this filter.
I talked to you guys about my thing last year where I was buying my mom Red Sox tickets, and I just kept watch on them, and on StubHub, by the way, and they got cheaper, and then I clicked on it, and the actual fees that you paid tripled, and so I said, no, I'm just going to wait for the fees to go back down and the tickets to get more expensive, which really made me wonder, who's actually making any of the money on this? Is StubHub just a front for different sports organizations who list their tickets? And it's. I got to tell you, they feel kind of scammy almost. Not like they're not going to deliver. No, because a real scam promises you something and then doesn't deliver it. It's like,
yeah, you eventually get your tickets,
right? It's not like hey, we're the IRS, bring $20,000 in gift cards to this corner to pay off your bill with us. That's a scam. This is just kind of slimy.
Here's what it feels like to me, Chuck. It's like when I agree on a deal to buy a car, and then they walk you into that back room with the general manager, who then tries to sell you on every added insurance and coverage package that you could possibly ever need. Can
we talk about those for a second?
Tire shinings.
Which ones of those do you take?
Ooh, shiny tire.
Because I got to tell you, the one that I do take every time now is the tire protection package.
Do you?
Reason being, when I bought my first car, literally drove it off the lot, popped a flat on the way home.
Yeah, no worse feeling than that.
And the tire protection thing would have the cost of it would have paid for itself in the first day basically.
How many tires have you popped since then, Chuck?
I tend to pop one every 3 to 4 years. There's enough construction going on and stuff that it does happen.
I have to tell you, I haven't had a flat now.
Oh, better knock on wood, Michael.
Yeah,
Michael, this is
now.
a dangerous thing to say in front of all our listeners.
I have easily not had a flat in a decade.
Oh,
good for you.
Oh,
yeah.
Boy, karma is coming for you.
Yeah.
Remind me not to drive with you anytime in the next decade.
Yeah. This is exactly what happened last time I said I haven't ever had jury duty.
Mike's been called to serve on 42 juries in 8 counties.
So my answer, by the way, is I never buy any of that stuff. But that's the feel I get for it is, okay, I know what I'm going to be paying for this car. It's advertised. We've agreed on the deal. And, okay, now you're going to bring me into this back room where the salesperson tries to make me feel guilty about my kids' safety in order to buy some package that I don't need.
StubHub also says, this is a quote here, in an email to NPR, StubHub says the filter introduced in late 2022 is intended to, quote, give fans the best experience when browsing for tickets by showing them only the lowest price and best tickets by section. Well, Maybe they want to see all of them. I'm not saying that they would buy the most expensive ones.
Do you know what I'm pretty good at? Looking at two tickets that sit right next to each other and figuring out which one's cheaper.
Right. I don't go to the grocery store and I'm like, hey, Bill, can you bring out all the avocados so I can make sure? No, like they're out there on the they're there. Like, I don't know.
Unnecessary.
Like just put them all out and I'll pick. That's all you got to do is don't make me feel like you've got something better out there that maybe I'm not getting. Anyways, I digress. Dow Jones Industrial Average is down 126 points. The S&P is down 8. The NASDAQ is down 19. So what was once a very small gain today has now turned into a very small sell-off. Not much movement at this point, and I don't know what to make of that. It's just happening. We're going to take a quick break for the rest of the day. Tomorrow we are going to wrap up the week. We do have some more inflation data coming out as well as personal income and spending data. We'll tell you all about that